Pierre, thank you so much again for joining us today, as you have done so many Fridays in a row, to bring us some new material, answer some questions, give us the latest about what's going on. Everybody that's joined us so far, thank you so much again for tuning in, volunteering. Pierre is my absolute favorite speaker, and he encourages the whole group to make this a conversation, something that we so love doing over Zoom. I'm thankful for all that have decided to participate today and join us. Pierre, take it away, buddy.
Cool. Thank you, guys. Well, thanks, everybody, for attending today. I know it's funny. I never thought I'd get so used to speaking at a phone or a computer screen, which I'm probably doing an aggregate of 20 hours a week at this point. So it's good to see everybody. As you guys know, we're doing a rotation kind of like of an informal Q&A session every other week, and then this combined with a rotation of the CE classes. And then we've been doing almost daily CE classes through our school, the New York Real Estate Center. And it's been a lot of fun. I know I look at the names on this list. I know a lot of you guys have been attending these classes, and really appreciate all the support. Hope it's been informative and helpful, and just a good way for all of us to stay connected. So I was joking around before we started. I started going back to the office this week. For those of you guys who are not in Manhattan and who left a while ago, I gotta tell you, it does feel a lot better than I anticipated. I walked home from work yesterday and saw restaurants open that I hadn't seen open in weeks. A couple of them have outdoor bars now where you can take to-go cups, which I thought was rather amusing. I'm not gonna lie, I did pick up a beer for the walk home. Figured the rules have changed these days, it's probably allowed. So the city's getting better. It was really nice to see. With that being said, I am working from home today for the first time. So if you hear ruckus in the background, I apologize. Going to the office all of a sudden became a luxury that I don't know if my wife's gonna permit 5 days a week. So we'll see how that goes. But in our Q&A session, Anna sent me 5 really great questions, and I'd love to play off of them if people have additional questions they didn't email or anything to, kind of spin off the topics. First one I'm seeing is that, do you see many big developers not negotiating things in contracts or forcing people to lose deposits? So it's kind of a two-pronged question, because the first part is, how are we negotiating new development deals now? And we are. I'm getting an offering plan and a contract in from the Lantern House today. Clients buying it in cash, got some nice concessions, and we're proceeding. I got a deal signed up a couple weeks ago, I think I told you guys about, on a rather large new development in Brooklyn, where my client went in for 3.5, and we negotiated for a funding contingency in the contract because they required financing. So we are seeing negotiations with developers, and we're seeing activity. I mean, obviously it's down substantially. What I'm not seeing just yet, which is the second part of the question, are developers renegotiating deals for deals that are in contract. I'll be honest with you guys, I haven't had one yet where we've successfully negotiated anything, because it's still too soon. I have a lot of clients who are saying, I'm supposed to close at the end of the year. Clearly prices went down. What can you do to renegotiate my deal? And the problem is, and this is where developers got smarter from 12 years ago, is that our deposits now are about 25%. I have a lot of people that put down 15% at signing and 10% 6 months later. And we're at the stage where we're sitting with 25% down on a $3 million deal. If there's no flaw within the offering plan, or or the developer, did everything according to AG regs in the plan, we don't really have leverage to negotiate a concession or get out of a deal. So, especially when you're sitting in a deposit that substantive, right? Like, back in the day, if you had 10%, the argument was, we'll walk away from the 10%. The property's already declined in value 20. If anything, we're just cutting our losses. And that argument had some, merit to it, depending if the developer is willing to call your bluff or not. When you're sitting in a 25% deposit, that's a very difficult argument to make. Secondly, the more common scenario where we were successful in negotiating for concessions is if we were hitting the deadline to close, where you guys know the developer has to close on one unit by the end of the first year of anticipated condo operations, and that's coming up for a lot of buildings. But the state extended all of those deadlines due to the pandemic. So essentially, those deadlines are extended indefinitely at the moment. So I have one now where they're supposed to close on the first unit, I want to say by the end of June, and they're obviously not going to. but that end of June date is now pushed off. I don't know when. I don't know if it's November 30th. I don't know what the date is yet. But that loophole, not loophole, it's not the right way to phrase it, but that avenue for negotiations is not yet an option for us. So to be honest with you, for deals that are going into contract, yes, we're getting concessions due to the state of the market. For deals that are in contract, it's status quo. I have not negotiated one deal where we've gotten, that when we went into contract a year ago and all of a sudden we're reducing the price or getting a concession. Do I think it will happen? Yes. I think we're still too early in this whole mess to really give you the proper answer on this. In a couple months' time, when we start getting close, and it's also to keep in mind, it's hard to bring up the conversation when you're so far away from closing. The closer you get to closing is when that conversation should be had, because one client called me up and he's like, I'm supposed to close in, fourth quarter of this year, first quarter of next year. I want a concession. And I'm like, why are they going to talk to you right now? Right? They're not going to entertain you at the moment. It's not, we don't really have, they're going to say, well, why don't you wait to see how the economy, how things unfold, and if things get better and you may be in a better financial position, as opposed to assuming 6 to 8 months in advance, you're going to be in a hardship scenario where you can't afford it. Right? So it's difficult. But that's where, we just have to kind of wait and see how things go. And as soon as, we get closer to some of these closings, then you'll start seeing some, concessions. So let me jump to another really important question I thought was a great one, which is coming up a lot, which we just had some timely news on today. It says a lot of us own investment properties or have clients with investment properties, and tenants are not paying rent or unable to pay rent. So you guys saw Cuomo just extended the freeze on evictions to August 20th. So we had a 90-day freeze of evictions. Now that's going to end up being what, 150 days roughly with this with the extension. I get it, right? You can't be in a scenario in the middle of a pandemic where everybody's running to housing court and trying to evict every single person in town who can't pay rent. The problem is landlords can't be in a scenario where they go close to half of a year with no cash flow. So it's a problem that starts from top down, because if you're going to basically say evictions are or we're going to freeze evictions an additional 60 to 90 days, some tenants are going to take this as an opportunity not to pay rent just from an advantageous perspective, from an opportunistic perspective. And what's the landlord's recourse? That's the biggest problem, right? What is your recourse? I'm advising all landlords to work with tenants, to work with them in payment plans, to work with them in providing concessions, to work with them and renegotiating like this payment schedule, for instance. Because at the end of the day, if I'm a tenant and even if I can afford the rent, what are you going to do? What's your recourse? How are you going to evict me? And B, by the time this is over, you're probably going to be pretty close to the expiration of a lease, right? Like if we're having a freeze on evictions for this prolonged period of time, I'm sure a lot of the scenarios on a 1-year lease, we're going to be, nearing the end of the lease. And then what? The pandemic's over and it's going to be a flood of cases hitting to housing court. It'll take forever. It'll take forever. You'll be in a long line of people. You'll be in court for a couple of years. And at the end of the day, the expense of having to go pursue, say for instance, the tenant could afford to pay 3 months worth of rent, right? The expense of having to sue to recoup with some of that nature won't be in anybody's economic interest, financial interest to do so, right? So it really, you have to just try to work something out. Everybody's doing this top to bottom. I don't know, I think the next step is the government's going to have to intervene and start pushing banks to renegotiate debt for these landlords, because it's a ripple effect, right? If the landlords aren't getting cash flow, they're not going to be able to pay their mortgage. And then what? The bank's going to go foreclose and then evict? It's kind of like, this thing can spiral out of control. So the next step is banks have to now, these banks aren't freezing foreclosures for commercial properties. It's only for homeowners. So I think that, the government's going to have to intervene to take that next step. So the loss of cash flow is sustainable for landlord is my point. Thus, it'll reduce the desire or number of cases for housing court once this is over. And then there's talks of a relief fund being created in New York for smaller landlords. So we'll see. It's an evolving story, but anybody on the first two topics with new development renegotiations and with the issues dealing with tenants, anybody have any questions on those two?
Pierre, there was a question from Jamie in the chat that asked, on new deals and new construction, are you seeing the right to cancel within a time frame? So it's a bit similar to what you were saying before, but are I guess our developers being proactive and saying, like, let's go ahead and give you a timeline, because if we can't produce the deal in a timeline, if we can't produce the property in X timeline, let's have a conversation.
Jamie, that's a great point. I always try to negotiate for that, because the flaw in the AG regs is that it only requires one unit to close by a certain date, doesn't address the other potential 299 units in the building. Right now, I'll tell you what, I've got 2 calls in this week, which show this will actually be a great sign for the market. I'm glad you brought this up. I took a call in yesterday for 2 foreign investors who are looking to buy an aggregate of $25 million worth of properties at Hudson Yards. And then the day before, I got a call from another foreign investor who's looking to buy something about $8 million at the Waldorf. Pretty, in the middle of this mess, to get those calls, I was elated. I was ecstatic. I was like, wow. I'm like, first of all, you're talking to super high-end market. And second of all, we're talking people from abroad. Like the one good thing this could potentially produce is that it could produce interest from abroad again, because investors are going to look at this as a good opportunity to get luxury properties at a discount. So in both those deals, I'm suggesting that the buyers request a drop dead date from before it gets to my desk. Because, what I typically try to do is that if the first year condo operations, let's just say, is set to mature December 31st, 2021, I'll ask for a drop dead date of 6 months after that date for my specific unit, right? So that way it's tied to my unit. So if we're ever in a disaster like this, my unit's addressed from a drop dead date. Now, developers, when I proposed this yesterday, we're going to get these dates. I don't know what they'll be, though. One developer came back and they're like, look, we can't give you 6 months. That's short, especially with what's going on these days. And I get it, right? Construction's going to be delayed minimum 3 to 6 months because of this mess, if not more. So certainly, I would even recommend asking what drop dead dates are the developers willing to give when making an offer these days. Because you have the most leverage. A term like that, you have the highest leverage of getting something when they don't have you yet as an accepted offer. Once it gets to my desk and you struck a deal, they're going to be like, Pierre's not going to kill this deal over a drop dead date. So that's why, for those of you guys who are on my CE session yesterday, I always emphasize this is why I'd like to get engaged early on, so we can discuss these things even, far before, an accepted offer stage. So Jamie, it's a great question. Okay, cool. Let me jump to the next one I got emailed. How will new development be impacted by COVID, the hardest hit in residential real estate, or will bounce back faster than resales? That's a tough one, because before the pandemic, there was a great stat. We had 25% of all new development units that came on the market, I think the date was since 2014, were still on the market. So 25% of all inventory, right, guys? You guys know stats better than I do. That sounds pretty accurate. 25% of all new development units built since 2014 are still on the market. That's a large number of units. So we already had an issue going into this on new development inventory and absorption rate, especially on the high end. Will this, look, what solves all problems? Price reduction, right? Will this result in enough of a discount in pricing to spark demand to the extent to make up for all that inventory? That's a tough question. It's an excellent question. I don't know. I'm not going to lie. I'm a little concerned, but I will tell you, I am seeing pricing come down. I am seeing deals more negotiable than I've seen them in over a decade. And I think that, especially when you're talking about people from abroad coming back into the marketplace, because let's be honest, new development inventory is at a glut of supply. A large factor of that is the decline in demand from abroad, right? Because a lot of this was built, tailored to foreign capital, entering the New York marketplace for perpetuity at, inflated valuations, to put it politely. So I think that I can see it where demand from abroad picks up, concessions increase, deals get done, and, new development recovers faster than resales maybe. But then we also, on the flip side, thinking devil's advocate, the volume of inventory is rather high. I don't know if that sentiment will be enough to make up for the volume of inventory. Resales, the resale market, unemployment, what is it now? 30 million people filed since March. I mean, our unemployment's staggering. Are people going to want to commit to home purchases now, without having the job stability that you may want to have before, investing in an illiquid asset? So I think that as soon, look, the unemployment numbers are a bit smoke and mirrors as well, because a lot of these people are furloughed, and a lot of these jobs will come back as soon as the world goes back to some level of normalcy. But I think unequivocally, a lot of these jobs will never come back. It certainly is not going to be the volume of unemployment we have now. But I can tell you, for people who are living here, who are still, gainfully employed and have a optimistic outlook on their employment future, now would be a great time to buy a property. Now with interest rates remaining, I mean, I don't know if you guys saw this. It's actually a great stat I read yesterday. Throughout the nation, mortgage applications for home purchases have increased for the last 3 weeks consecutively. That, in the middle of this mess, mortgage applications to buy homes are increasing weekly for the month of April. That's, I mean, to me, I saw that. You guys know I go on Bloomberg a lot, and I wrote them an email right away, and I'm like, look at this stat. Your best segment you can do tomorrow is a stat talking about the momentum going into the housing market the moment the pandemic's over. Who would have thought, out of anybody in this call, that we would have had a stat like that in the month of April? The month of April, where, if you guys remember, the beginning of the month, the front page of the Wall Street Journal was 100,000 to 240,000 expected deaths in the next 2 weeks. And we have mortgage applications increase for buying homes. So that does tell you where, the mindset is for consumers. So I guess talking this through with you guys, and I'll be honest, I didn't think of the answers before the session. Talking it through with you guys, I can see the resale market rebounding a lot faster than a new development market for the reasons that we just discussed. Interesting.
Pierre, oh, sorry, we have, I'll keep my question for the end.
Oh, Emily, that's a great question real quick. Emily, that's for new purchases, not refinances. Refinances, banks actually increased interest rates to disincentivize people to apply to refi, because they got too many refi applications. They don't want them. So they'd rather book home purchases rather than do refis. Largely because the home purchase component, it's easier for a bank to appraise a property in a purchase than a refi, because we all know the appraisal process is not a perfect science. On a purchase, they at least have a contract showing the value where multiple parties agree this is the value. Brokers on both sides, buyer and a seller, and that helps on top of the appraisal aspect. On a refinance, you're relying just on an appraisal for valuation. So there's a higher level of error, or higher potential for error in a refi appraisal than in a purchase. So my stat is absolutely related to home purchases, not refinances. Cool. Nick, we got a couple others, or because I got 2 more on the list.
Yeah, go ahead. I was going to say Diane's question is up next. What percentage of a new development project have to be sold to justify a developer sitting with the remaining inventory to get their price because of the economics of existing sellout and covering their expenses?
So Diane, it's a very interesting question, because there's no formula for your answer. It depends on each developer. So I'll give you a couple examples. There's a building, I believe it's 695 First Avenue, the 1UN, if I recall correctly. Solo's the developer. I went to go tour it. It's a beautiful building. I want to say it's about close to 400 units with a third condos, 2/3 rentals. They don't have a construction loan. They built it with cash. The whole thing, cash. So a developer like that, I think he's 90. He's a billionaire. He's probably, I doubt his pricing is whatever he wants it to be, right? He doesn't have to answer to anybody. So in that scenario, I can imagine they're sitting tight, unless they get fed up of dealing with the building. You take another one, unfortunately, the one that's getting beat up by everybody is One Manhattan Square. What was their latest concession this week? They're advertising 20%, up to 20% reductions in pricing was the email I got.
Yeah.
I got an email like 3 days ago, willing to discount pricing up to 20%, which, let's be honest, it means 25, right? That's on top of everything they've already gone through. but that project's been a disaster. I think they're maybe still have, I think they're only 25% sold. I don't know the exact number, but it's a very low number. So it really is project to project. And it depends on the construction lender as well, because the construction lender, there's going to be a floor in pricing for each unit. So developer cannot go below a certain floor without the construction lender's consent. And some construction lenders are going to, sit here and say, we're going to hold you to this floor regardless of economic conditions. And worst case scenario, we'll take over the project and the hell with you. Or they'll be realistic and say, oh, wait, there's a pandemic. Maybe we need to readjust what our floor is and get deals done. It all depends. Each scenario is going to be completely different. Cool. So, Nick, do you have any others? Or should I jump through?
Yeah, keep going. We're all set. Cool.
The next one. What trends are you seeing with people trying to get out of leases and rental agreements? We're getting this every day, and to be honest with you, we're getting it both on the residential and commercial front. Nobody's exempt from what's going on today. I mean, we represent a number of landlords, and I get a letter every week from a tenant. We're not paying rent. We got hit hard by the pandemic. We're shut down. Let us know what you're willing to do for us. It's happening across the board. To be honest, everybody in town is coming. Everybody in town is coming to the table to negotiate. We have tenants that are saying, on office spaces, look, the way I preface it is the world came to a screeching halt on 14 days notice. No one in town could have prepared for this. So our tenants come to us. They're like, Pierre, what happens if, my office lease, I can't afford it right now. Some clients got the PPP funds. So, part of the PPP funds is payment of rent. So we're advising them to call their landlords, make some form of payment. A lot of them are paying half out of goodwill, knowing that part of it's going to be forgiven and part of it's going to be built into payments on the back end of the lease. In terms of residential tenancies, the problem is these are 12-month leases. And depending where you are in the term of the lease, it gives the ability for tenants to be really cute right now. If you got a tenant who has 6 months remaining on the lease, and we just had the eviction freeze extended from today's May 8th to August 20th, and the lease expires, October 31st, that tenant's sitting pretty. They're sitting pretty not paying rent, and they're sitting pretty moving out whenever they want and screwing the landlord, to be honest with you. It really depends on how unscrupulous the tenant is. If they really are in a financial hardship position, they should, be forthright with the landlord to try to work something out. But that's the toughest part about this for landlords. You're going to get people who manipulate the circumstances to their own benefit. It's undoubtedly going to happen. But that's why, for the landlord, it's not a matter of, might versus right or wrong. It's a matter of just really trying to mitigate your losses. And the only way to do that is to come to the table.
Pierre, I have a question.
Yeah.
Have you heard of any of the big office tenants, SL Green, Vornado, make any remarks on this, what they're doing for their tenants to be accommodative during this time? Not
just yet. I think a lot of them are trying to keep it quiet, because they don't want it to become widespread.
Okay.
I know they're not going to advertise like, hey, we're willing to do X, Y, and Z to the whole world, and then every tenant's going to come to them, Like my landlord, I leased 11,000 square feet of space on 40th and Madison. They didn't come to us with anything, and we were thinking, are they going to expect us to pay, full freight right away? What's going to happen?
Right.
I simply wrote a polite email, and I was like, what are you guys doing for tenants? Just curious if the building has if the landlord's implemented a policy. Called me right away, and they were like, gave us a great proposal without me even saying a word. I didn't negotiate anything. They said something. I was like, you guys are being extraordinarily reasonable. I'm more than happy to proceed this way.
Amazing.
So yeah, it really depends, but I'm lucky. We have an excellent relationship with our landlord, and they've done right by us. So, am I going to be, a crook and try to squeeze a couple bucks out of them for short-term gain, long-term loss? No, but not everybody has, my mentality either, right?
Right.
Last thing I'm seeing here is a market update. So, we're still closing a good amount of deals on the residential purchase sale side. I want to say we closed 10 deals this week, which is far from our normal volume. but it's still, not bad under the circumstances. Our residential banking, we represent, as you guys know, a number of banks. I want to say we closed 15 loans this week. Our commercial loans, those are easier to close virtually because a lot of those are always happen virtually. But there's still more deals, far more deals are closing than deals that are dying, which is a great sign. And like I said, the highlight of my week was getting 2 phone calls of people from abroad looking to buy luxury properties at marquee projects. That's a good sign. I was really happy. I'll tell you if either one goes into contract in the next couple of weeks, next time we talk. And then we got a deal at the Lantern House for a client who's buying for their daughter to live there. So, it's those are good signs, So I think relatively speaking, the market, I think you're going to start seeing a week to week, very extremely gradual increase. But, I'll take it as opposed to a decrease, right? With everything that we have today. And we'll just have to see how, negotiations use. I think that's going to be the biggest thing. June, do you want to unmute yourself? I think I saw you pop up with a question on rentals.
Yeah, I was just curious, in rentals now, and forgive me that I've kind of lost touch with where we are now. Who is paying broker's fee? Who's permitted to pay the broker's fee? What are we up to with that? Who's doing what now?
So historically, in a bull market, the tenant paid the tenant's broker and the listing.
Right, I'm talking about legally. Remember for a while?
Yeah. So legally now, the tenant can pay their own broker, but they cannot pay the landlord's broker. So that's how it works now legally. So market conditions don't matter. That's what it is. It's black and white.
So basically the landlord has to pay their own broker fee.
That's correct.
Broker's fee. Okay.
That's correct.
Right. Thank you.
Mm-hmm. Cool. Nick, we got any others?
No, that's it.
All right, guys. Well, listen, it's a nice way to start the day. Thank you guys. As always, it's great to see everybody. If you guys have anything that does pop up that we didn't cover that make, pop in your minds after today, email me. To be honest with you, your questions are really beneficial for me because, it helps me gauge the market a bit and see different perspectives. And, you guys know, I love doing this stuff. So thank you guys. Hope everybody has a great weekend. I am ecstatic my door did not break down. So let me run and make sure my wife did not strangle one of these children. And I'll talk to you guys next week.
Thank you so much, Pierre. We really appreciate you taking the time. Be safe, everyone. Enjoy the weekend.
Anytime.